Hey, what's going on? It's Brendan King from the Brendan King Group at Real, and this is your June 2nd through June 8th market update. So, definitely a lot more going on lately than there was for quite a while. There was obviously going a lot going on for 2 years, but we felt like we were almost doing the same market update every single week. Now it's a different world, completely different world. Today, the Fed increased the Fed rate by 0.75, which is actually the highest in history since 1994. So I did pull a few articles just to kind of show what that means. Again, just remember that Fed rate increases do not directly correlate with mortgage rates. Mortgage rates are more tied to 5 and 10 year bonds, Fed bonds, and mortgage backed securities, even more so. So some of these increases have already been baked into the market. For instance, today, the interest rates went down when the Fed pushed up the Fed rate by 0.75. Interest rates actually went down by 1 to 1.25 bips, as they say, dropping back down in a I think it was 4.5 category. So a definite change compared to last week, where it was a whole new world for sure. So yeah, to 4.5 on a 30 year, which is not bad, not too bad comparatively to what it's been lately. I think yesterday it was as high as 5.75 to 6. So let's check out some articles. Um, as normal, we just want to give you guys the data, get straight to the point, really let you know what's going on based on what economists say and what's really out there. No hype, no extra junk that's not necessary. So one thing that definitely this is doing is increasing mortgage rates. So let's not get that twisted in any way. So on a $400,000 loan, 30 year fixed at 3%, the average payment was about $1,686 a month. So if we were to land and stay around the 6% mark, it does mean that same exact house at 400,000 would be about $2,400 a month. So it's a 42% increase in overall monthly repayments. So that's not something to just write home about. That's definitely a pretty major difference. Um, some of the things that I was reading about would be like mortgage rates increase faster than at any point in history. It definitely is wiping out some buyers in the market. However, strangely, we still have low inventory, and it may be a good time for the buyers that actually are still qualified even within these interest rate changes. That's the interesting thing, is if you are a buyer, now could actually bring you a little less competition. Um, and then a little bit about the 0.75% interest rate hike, which again is the highest in 28 years. Um, so at the Fed, what they're trying to do is curb inflation. So right now things are getting a little out of hand, costing a lot more money. Their big thing is to put the brakes on that, and the way they do that is by increasing the Fed rate, which then is the amount of interest that is paid on things like credit cards, auto loans, and un or indirect, I should say, mortgages as well. Um, so this article, we'll attach all these articles, says a little bit about like things you should do in these types of situations. I've spoken to some uh, people that are definitely even far more intelligent than me on the stock market side, who this is their time when they buy in. Things go down, you buy in. I am in no way giving advice on how you deal with your stocks or anything like that. But on the housing side of things, the one thing I will tell you is we're seeing a little bit of the same old in this area. 101% of list price on average was received, which is what it's been for quite a while. Average days on market has been 18 days. Weeks of supply, 6 weeks. New inventory, 864 homes, just a little more than last week, and quite a bit more than the same time last year. Active listings, 3,835. So there you go, right there. Compared to last year, 2,215. This year we're at 3,835. So we're almost doubling active listings. We're not quite there yet. Obviously, 4,400 would be, but we're moving in that direction for sure. Weekly sales, 635 homes, which is down from the week before of 690. Under contract, 752 properties. And then average weekly sales price of 613,950, with the most expensive home sold this week at $5 million. So again, weeks of supply ticked up again to 6 weeks. A neutral market to us is about 5 months of inventory. So we're at 1.5 months. So we kind of need to be at that 10,000 active listing, 9 to 10,000, where we start to see things neutralize a bit. So as a buyer, I think you may have some opportunities right now to get in there, especially with some panicky sellers reading headlines and seeing things that may scare them. Some people may be willing to part with their property a bit lower than what they're listed for. And then on the sell side, let's be honest, if you bought your house 2 years ago, you're still looking at 50% to 55% increase in value from 2 years ago. You're still sitting on a ton of equity. So no, you're not going to get 10 offers and people fighting to catastrophically high values, which is where we were heading to. But you're going to get a good price for your home, even still. And definitely take a look at some of these articles regarding the Fed rate, and also regarding just some of the things you should look out for while the Fed is definitely doing whatever they can to curb inflation. And as always, just reach out to us if you have any questions at all, questions about the market, questions about the value of your property. We're here to help. Definitely, we can run a CMA, tell you how much your home's currently worth, and then to have a discussion. Is it worth selling? Is it not? I've found that some of my clients that couldn't find homes on the buy side now have buyer options. So they can still get a good price for their home, way above what they bought it for. We have one client, they bought it at $330,000. Now the house is worth $815,000. They still can get a great price for their home, and then go find one that more suits their current needs. Reach out. Definitely, we'd love to help. And of course, don't forget, text MARKET to 702-553-1955 if you'd like this by text every single week. Have a good one.